Meet Sam. He worked 15 years in Google, saved religiously, and finally had $100,000 in his retirement fund. A financial advisor told him, "You want big returns? Let's put some money into this hedge fund, run by a top manager on Wall Street." Fast forward 1 year, Sam's investment down 60%. The hedge fund manager still got paid millions in fees. How is that possible? How can someone lose other people's money and still get richer? That's the twisted reality of hedge funds. And today, we're diving deep into how some hedge fund managers are making people poor. What's a hedge fund? A hedge fund is like a private investment pool. People give money to a fund manager who makes big bets trying to beat the market. They don't just buy stocks. They use exotic strategies like short selling, derivatives, leverage, and algorithmic trading. Hedge funds promise big returns, but here's the catch. They also come with big risks. And when those risks don't pay off, it's usually the investors who lose. The fee structure is a scam. Most hedge funds charge 2 and 20. That means 2% of your total investment every year, no matter what profits or lose. Let's break this down. If you invest $1 million, the manager makes $20,000 every single year just for holding your money. If they make you $100,000 in profit, they take $20,000 more from that. But here's the kicker. If they lose you money, they still get the 2% fee. So if your $1 million drops to $800,000, they still walk away with $16,000. It's like a casino where the house always wins, even when you lose. Who really loses? You might think hedge funds are only for billionaires, but that's no longer true. Today, hedge funds pull money from pension funds, endowments like colleges and charities, and increasingly, regular people through financial advisors and retirement accounts. So when a hedge fund blows up, guess who gets burned? Not the millionaire manager, but people like Sam. People like you. Famous hedge fund disasters. Let's look at some real cases. 1. Long-term capital management. Run by Nobel Prize winners. Used crazy amounts of leverage. Lost $4.6 billion in a few months. Almost collapsed the global financial system. 2. Melvin Capital. Bet against GameStop. Lost billions when retail investors fought back. Shut down the fund, but the managers still walked away rich. 3. Archegos Capital. Secretly borrowed billions to buy stocks. When trades went bad, banks and investors lost $10 billion. The founder barely faced consequences. These aren't rare accidents. They're part of a pattern where hedge fund risks are private, but losses become public. Why do people still trust hedge funds? Good question. Hedge fund managers are great at selling the dream. Fancy suits, CNBC interviews, 30% plus returns in good years, charts, data, confidence. But what they don't tell you is, most hedge funds actually underperform the stock market. Yup. Studies show that over 80% of hedge funds don't beat a simple index fund. So why do people still invest? 2 reasons. 1. Greed. Everyone wants high returns. 2. Lack of transparency. Hedge funds aren't required to show much about how they operate. It's a black box, and by the time it blows up, it's too late. The manager always wins. Let's go back to Sam. The hedge fund lost 60% of his money. That's $60,000 gone. But the fund manager? He got paid handsomely. He blamed the market, said, "We just had a bad year." He moved on to start a new fund. New name, same game. And more people still investing. This is what makes hedge funds so dangerous. They take huge risks with your money, but none with theirs. Heads. They win. Tails, you lose. What can you do instead? Here's the good news. You don't need hedge funds to build wealth. You can invest in low-cost index funds. Diversify your portfolio across industries. Focus on long-term growth instead of flashy promises. And always ask, if this manager is so good, why is he taking 20% of my gains? Hedge funds aren't all bad. Some are ethical, well-managed, and transparent. But too many are built on hype, fees, and risky bets. If you are not careful, they'll get richer while you get poorer. So next time someone says, "This hedge fund is your ticket to wealth," just remember Sam and think twice before handing over your savings. Comment below, have you or someone you know lost money in a hedge fund or shady investment?